Imagine being able to assess whether a trading strategy is profitable in a mere seconds. Well, that's what we're going to explore today in this penultimate chapter of our Python for Finance free course. A trading strategy is simply buying and selling an asset according to predetermined rules. And what we're going to learn today is how to backtest a trading strategy. Backtesting means evaluating your strategy over historical data. So like this, you can extract some valuable statistics to judge whether your trading strategy was profitable and will potentially be profitable in the future. Say, for instance, you have a trading strategy and you would like to know if you started it a year ago with $1,000, how much would you have in your portfolio today? But also, you can do much more than that with backtesting. And we're going to go through all of this. You can evaluate your risk, your drawdowns, and other key factors. As usual, you can find a written version of this course on our website. Check the links below. Just to be clear, this is an educational course, so nothing I do or say should be interpreted as financial advice. Also, we offer this course for absolutely free. If you want to support us, don't forget the little like, a subscription, and share this course with anybody who might like it. Now, let's get started. The first thing we need to do is to decide what strategy we're going to backtest. And for this example, we're going to use a very simple one, which uses two indicators. The green one that you see here is a 50-period simple moving average, while the reddish one here is a 200-period simple moving average. Remember that this period, this 50 period here, or this 200, corresponds to a rolling average. We've seen that before in this course. So it basically means if we take the 50-period moving average, that this point, let's say here, this point here corresponds to the average of the price over the past 50 prices. While for the 200, the point here will correspond to the past 200 prices, the average over those 200 past prices. Okay, so what do we see here? Well, this 50 period, you would actually call it, you can call it the fast moving average or the shorter period moving average, while this one is the slower moving average or the longer term period moving average, if you want. And the reason why I'm saying this is because this one is faster. In other words, because we're averaging on a lower amount of periods. Well, you can see it reacts more to the changes of price. So when this price started shooting up, you can see that the 50 moving average started increasing as well, faster than what the 200 moving average did. So what happens with that is that generally what you have is when the 50 period moving average crosses above the 201, as you see here, you have what we call a bullish crossover. So in general, that means that what will follow is a uptrend. And then on the contrary, you have the opposite, so a bearish crossover where the short term, the fast moving average crosses under the slower moving average. And that generally signals more of a downtrend, a bearish move. So that's what we are going to use today to backtest. And in case you're not too familiar with this kind of charts here, let me just remind you that this is a candlestick chart, which represents the evolution of the price of an asset. And each candlestick basically is what we call the OHLCV representation, which we've been dealing with a lot with Pandas when we were analyzing some market data. Basically, those candles represent the open, the close, the lowest, and the highest value that you get during a time frame. Great. So let's create our Jupyter notebook for this chapter. So it'll be chapter 9, IPy, PYNB, beg your pardon. Okay, and I've opened it with enter, and there we go. And you know what, guys? We're not going to cut it. The first thing we're going to do is import a package, and I'm sure you've guessed that this is going to be our good old Pandas. And I'm giving it the common alias PD. So there we go. So I can simply run this and it's all good. Great. So the first thing, well, what we need to do to backtest, you may also have guessed that, is that now we need to import the data we want to backtest the strategy over. And for this, we're going to use the Bitcoin USDT data that we've been using across a few chapters now. By the way, if you don't have it, you can come and download it here from this link. Okay, so back to the code. So we're going to load that into a data frame. So we'll call it df, and then we'll go pd.read CSV, as we've seen how to do that, in the past. And we simply, in the read CSV, we simply need to give the name of the data file that we want to load. So if we do that, and let me put df here, so if I run it, I'll get the display. And here we go. We have our data frame. And as you can see, for each trading session, so you remember this file, the time frame is 1 hour. So that's data on the BTC price since I think 2017 for every hour. So you can see what I was telling you before. We have our open, high, low, close data. We also have volume, the volume trading in each of these timestamps, but timeframes, whatever, but we're not going to use the volume information today. Another thing that you can spot and that you're probably getting familiar with here, this is shown in what we call the epoch timestamp format. Also, I don't think I've mentioned that maybe in the previous chapter, but is also sometimes referred to as the Unix timestamp. So this is actually basically the time counted in milliseconds since the 1st of January 1970. So this is not helpful for us. It's helpful for machines to transfer the information, but not for us. So probably the first thing we need to do, as usual, is change this so we can understand things properly. So to do that, you might remember that the function that we use is toDateTime. So I'm going to write df date is equal to pd toDateTime. And what I want the column date to be the column date where I've converted that time. So I'm doing pd toDateTime df date. And let me also display the thing so we see what comes out of it. And we do see that the dates were converted, but there is something funny happening because it's giving us some dates since 1970. And I can tell you that Bitcoin for sure didn't exist around that time. So something must be wrong. And I did that on purpose, is to show you if this, you might also remember or notice that this is actually, I've mentioned it, but it's not seconds. It is written in milliseconds. So you see that if you do the mistake, it's kind of obvious that it will pop up as something wrong. So we simply have to give the unit and say that it is milliseconds. So let me actually reread this, and then we can do this. And now we can see that it does make much more sense. The dates start from 2017, and it is quite clear also now that each row corresponds to the 1 hour candlestick, etc. So that's all good. There's something else that I like to do when I'm dealing with OHLCV data like this, is to make the date column become the index column, because as we have seen in some previous chapters, when you do that, you have some very powerful search and features and things like that. So let's do that real quickly. So to do this, what we do is we do df set index, and we say that this is going to be, well, our column date. So df date. And we want to do that rather than doing df equal df set index. I want to show you this other way where you use a keyword called inplace and you say inplace equals true. And if you do that and we'll set this, you can see that we do have now a column that is now we have the index column, beg your pardon, that is the date, but we still have that previous date column. So basically what we should have done just after this is del the df date column. So let's do that because we don't need that anymore. But I'm going to have, since I already set the index, I think we are going to have trouble. So I should just run also. We do it in the good sequence. And there we go. You can see that now we have our nice OHLCV data with the date becoming the index. Great. Okay, now that we're all set with our data, I think it's time we compute our indicators, so our two moving averages. So for that, we'll be using Pandas as well, and some methods that we've already seen. So basically what I'm going to do is first create a new column. So I'm going to call it MA50 for moving average 50 over 50 period. So here, what we're going to use is the closing price. So that's kind of a convention. You could work with the open price, That's really up to you. But in generally, people most often work with the close when they're doing moving averages. Okay, so we want to do a 50 period moving average. So as I mentioned previously, and as we've seen in the past, this is a rolling average. So we want to do our computation over a rolling period of 50 period. So what are we doing over this rolling period? Well, we're computing the mean. So there we go. Let me show you that this has all worked well. So you can see that now we have a new column added with our MA50 here. And not surprisingly, it starts the first rows, we have none, so not a numbers. And you can think about this, but it makes sense. Simply the first values do not have 50 periods in the past or 49 periods in the past, let's say, to do the computation on. So basically the first 50 here will have a none, and then the computations can start being done here because we're no longer missing data before to do this averaging. Okay, great. So might as well add our second indicator. So the MA now is going to be the 200 one. So all I need to change is here in the rolling and put a 200. And if I run this, now you see that we also have our MA 200 column. Great. Now we can start implementing the backtest. So the first thing we need to do is kind of implement the strategy. In other words, we want to signal in the code in our data that when the 50%, the 50 period moving average crosses above the 200, well, for example, we could have, for example, a value somewhere that turns to true to characterize this. So to that, pretty easy. First, what we need to do is we'll initialize some new columns. So we'll put the by signal and we'll say, we're just initializing here. So we're creating the column and by default, we're putting some false everywhere. So we'll put a cell here and you can see that what that does is simply creating two columns with falses. And what we want to do is to turn these to true when, for example, so for the by, we want it to turn to true when we have the bullish crossing. And for a cell signal, we want to turn those falses to true when we have the bearish crossings. Okay, so let's work on our first on the buy signal. So for this, we'll simply have to do change and say that df of lock where, and we'll have to give the condition. So we'll give, sorry, I need to do that. So I'll go in df lock, and here we need to give the condition. So the condition is when the MA50 goes above, so I'll put a superior sign, df MA200, and here I want to do a comma. I want to switch that to true. So I'll put equal true. Great. So let me run this. And so we should see, oh, and indeed, we did see, it was quite fast. But we see, for instance, that now all the last rows and probably many places elsewhere in the data frame, I remind you this data set is huge, 51,000, more than 51,000 rows. But what we did see is that we have the true under here at the last, we at least have, beg your pardon, some trues at the last rows. So a few things we should mention here. So you can see that we have trues everywhere in those rows. So we don't have only a true when the crossing happened, we have a true whenever the df MA50 is larger than the DA 200. So that could be a problem. I mean, what we could do is add a condition here and say only do a true when we have this condition that is verified. And on the previous row, we have MA50 that is still smaller than MA200. So we could do that, and therefore we would have only a true when we have the crossing. Another thing that we can do, and which is the one we will do, is handle during the backtest, when we're running the backtest, that we don't open simply a new position if one is already open. So we don't have to do some extra modifications here. Great. So what I'm going to do is also add our closing condition. So our closing condition is now the opposite, MA50 smaller than MA200, and this should be a sell signal. Okay, so we don't see anything, so probably those columns here don't verify, those rows here don't verify, but there are for sure some in the middle. We can actually simply verify this by doing this little sell signal and do value counts. And we'll do that. And let me print this. And you can see that in our sell column, we have about half, well, yeah, close to half for both of them, close to 27,000 falses and 24,000 trues. Okay, something else I didn't say, but I want to mention, does it make sense that we have a true here? Well, yes, it does, because you can see that now MA50 is indeed larger than MA200. Great. So now what we can do is actually start doing the backtest, running the backtest. So the point here is to scan through each rows one after the other. And basically, as soon as we meet a true in a buy signal, we can open a position, so enter a trade. And this will carry on across a few periods, whatever. And as soon as we hit a true in the sell signal, then this will be the signal to sell the position and so close that position. Great. To start with the backtest, what we have to do first is to initialize a few variables. So we should say the amount we're going to trade with, our portfolio. So I'll call that balance, and I'll say we'll start, for example, let's say $1,000. There we go. The other variable I want to initialize is position, what I call position. So this is going to track whether we are currently in a position or not. So this is going to enable us to, what I was telling him before, to avoid opening a new position when we're already in, we have opened a trade. Great. So now next step is to start iterating over all these rows. So for that, we'll do a for loop. So for row, so for, beg your pardon, in index column, comma, row. In what we have to do here is df and use iter rows. There we go. And I'll put this, finish with a column. So basically these two, this was the iteration through each rows that we're doing with this iter rows is going to return two variables. One is going to be the index, so caught with this variable here, and then the row. We might as well do a little print so I can show you how it looks like. So I'll do index and then row, and probably we don't want to go through the whole data frame. So I'll just put a iLock here from -5 until today, just for the example of the print. So if I run this, you can see that each time what we get first the index here, and then we have the corresponding row. So the index is here, and then the row is the row variable caches all the rest. Great, so I can now remove this, and then we'll also remove that. And there we go. So first, what we should deal with is entering of the position. So I will just structure that nicely and put a little comment here so we know. So here we'll be testing the buy condition. Okay, so we have basically, I should summarize that we have basically two conditions to actually do a buy, so enter in a trade. The one that is obvious, as I said, that we've mentioned before, is that as soon as there's a true that pops in here, then it's time to enter a position. But the other one that I mentioned as well is that we can only do that if we're not already in a position. So we do if condition, beg your pardon, if position is none, then we're allowed to enter a position. But what we also must check is whether row, whether our row has a true. So that's why, so row, we will do buy signal, and then here we have to say is true as well. True. There we go. So that's done. So here we're allowed to enter a position, So when we're entering a position, what we want to save, the important information, is going to be our buy price. And we said that we were working with the closing values. So the buy price, so the price at which we buy our Bitcoin when we enter the trade is going to be this row close. And I didn't want to do that. But the other thing we want to also save, which is important, is how much are we buying? So what is the size of the position that we are entering? So I'll just call that USD size. And this at the beginning is going to be balance. So remember that balance at the very beginning we've set it to $1,000. But as the trades will happen, we'll probably earn some money, but sometimes lose a bit as well, etc. So this price, this balance here is going to change as we're trading. And we're going to keep things simple here for this example today. And we will simply saying that we're always entering each trade with the full amount that we have. So the first trade will be entered at 1,000. Let's say this first trade was a winner and we earned $100 with that first trade. So our new balance will be 1,100, meaning therefore that the next trade that we'll enter will be entered with $1,100. Great. So now what I'm going to do is I'm going to regroup all this information into our position variable, and we're going to simply use a dictionary. And in that dictionary, we will store first the buy price. So buy price, this is going to be buy price, will be buy price. And the other one we want to do is also USD size. So let me actually do this like this. It might be a bit faster. USD size, and here USD size as well. Great. So that's our position. So what we should do, probably that wouldn't be nice, is then when this happens, we do a little print so we can keep track of what happens when. So for this, I'll use a F string that we're used to using now. The first information I probably want to give is the date when when it happens. So I'm just going to do and just put the index here, and then we'll write a little sentence. Bought Bitcoin for, so how much did we buy? That is for the USD size. So we're giving the number in dollars, and we want to also know the price at which we bought it. So the price of, and here we put buy price. Great. And that is also in dollars. So let me put that here, and there we go. So you know what? Let's run it. We haven't done the closing, but let's actually the closing of the position, but we can just run this and see what comes out of it. And you can see that the first position was entered on this date here at 11 o'clock, and we've bought $1,000 worth of Bitcoin. That's because our initial balance is that amount at a price of a bit more than $4,000. Great. So we see that we have only one message here, one print that happened, which makes sense because we opened only one position. And we didn't open more than that because we never closed it, meaning that this if is none did work well, and we haven't accumulated opening several positions when we never closed any. So now we should indeed implement the closing condition and the operation of closing a trade. So let's do that. Let me copy this and put it back here. Now what we're doing is the sell. So here we should say now the opposite. We can only close a position if a position is opened. So we could do if not none. That would work, but let me actually show you a shortcut directly. We can just do that, and then the same is understood by Python. And now, well, the row is not if the buy signal is true, is if the sell signal is true. So that's great. So what we want to do first, what is the price at which we are selling? Well, we said we were working with the closing values, so that sell. Oh, I want to write sell price. Beg your pardon. So sell price is equal to row close. Great. Something else I want to compute, a variable, which is going to give me the relative difference between the buying price and the selling price, or in other words, the percentage gain that we have reached when we sell, that we've obtained when we do the sell of the position. So I'll simply call that trade results. And this is going to be, as I said, it's a relative difference. So it's going to be the final price, so the sell price, minus the buying price. So that will be stored. We'll use what we've put in our position, and that will be the buy price. So what has been stored in this dictionary here. So a relative difference. So is initial minus final divided by final. And there we go. And I'm not going to put 100% here because I want to use the trade results to this trade result computation to compute the new balance. So now I'm going to say that balance is equal to balance. Remember that in Python, actually, when you do something equal plus, etc., with something like this, you don't actually have to do balance equal balance. You could simply do balance plus equal, and that will add to the previous balance. So let's do that. So we're going to do this. And so what we're adding is the trade results. So that is our ratio of gain or loss that we're going to do times what? Well, how much we've sold. And how much we sold is now position, but here the amount is not buy price, is USD size. Great. So that's our new balance. Great. So what we also want to do, let me actually simply copy this. We want to print nicely what's been going on. So I'm going to do index. Here we are not buying at this point here, we're selling. So sell Bitcoin for, well, how much we sold? Well, actually the balance. And at a price of, well, not the buy price, it should be the sell price. So sell price here. And let's add an extra information. We want to store or see the percentage gain or loss that we've made. So what I'm going to do here is actually, rather than just putting trade results would be a number with a lot of decimals. So let's directly round that number. So I'm going to do trade results, but which I want to convert to a percentage. So I'm doing times 100. And then I want to round that, let's say, with two numbers after the decimal points. So 2 decimals. Great. And this, let me get it right, is a percentage. So I should come here and then put a little percentage here. And I think this should work. Oh, no. One last thing. We mustn't forget something important. Now that we've sold, that we've closed our trade, what is now the status of position? What should it be? Well, it should be equal to none. Because if we don't do that, well, actually, let's run this and I'll show you. What will happen is that we will open a position and we're selling all the time. But what we want to do is only sell the position when a trade has been previously open. So we want to do that. And as soon as the sell happened, we want to reinitialize our position so we can then be allowed to open a new one again. So what did we get? Let's have a look at a bit at what was printed here. So you can see that we have the one that we already saw before, but the first one was our first trade that we entered. And you can see that indeed we have now a nice iteration through where we have some buys, then a sell, a buy, a sell, etc. Where each time for when we're closing, we do see the percentage change that we get on our portfolio. So like a 2% here, that was a winning trade, the first one. The second one was, however, losing. We lost 7%. Then we lost again 8. Then we earned 5. Then we earned a nice 29.35, etc. You can see, for example, that here we have a huge trade which made more than doubled our portfolio, more than 100%. We could actually view everything, and now we can scroll through here. That can be nice to go really into details and check the trades that have been happening. And for example, if you want to check on TradingView to see if things coincide, etc., that can be quite nice to go through all of this. Okay, anyway, without further ado, I think we should probably, the first information that we want to do is print what is our final balance, because basically we started with $1,000 and we want to see by the end of all our data, so by the end of until the end of the data set, how much we would have made. So I'm going to do a little F string here. Let's do an F string, and I will say our final balance is, and let's actually round the number, because otherwise we'll have too many decimals. So I should put balance here, put a comma 2, so we'll round up to 2 decimals. And this is not percentage, beg your pardon, it should be dollars. And what have I done here? Yes, I need to put it after I close those curly brackets. Great, so let's go. Well, our final balance is $7,847.25. Not bad. But just remember, past performances never guarantee future results. So it's not guaranteed if a strategy worked well in the past, it's not guaranteed that it will work well in the future. But if you do the reverse, a strategy that didn't work well in the past has practically no chances to work in the future. So you should definitely forget about it. Today's goal was to create a strategy in the simplest way possible. And in about 40 lines, we've achieved that goal. However, it's important to note that we haven't included things like trading fees in our backtest, which can significantly change the results. Also, we need a deeper understanding of the losses and the risks. We will cover all of this in the next chapter. But for now, I think you may have realized that we've built this code without using a single function nor a class. So I suggest that we now take a bit of time to structure this code nicely for future applications. For this, let me directly fetch from on the website, on the written version, the function, the class, beg your pardon, that I've created that summarizes nicely and structures all of this nicely. So let me paste it here, and then we can go through it. So I really recommend you to structure as much as you can your codes, etc. Here for the first example, I really wanted to show you in really a few lines. I don't know if you stack them together, but maybe it's less than 20 or 25 lines, you can actually run the backtest. But the advantage of structuring things nicely like this is that, well, first, you understand things better when you look at them, but also it's reproducibility. So now with this, you'll be able to come here and change the strategy, add your own signals, etc. You can really do that by yourself. This is a structure that we suggest, but of course, please do your own, etc. But as we will see, it's very easy to then change things in here. So what happens in here? Well, actually, you will note that the order here and the way we write things down really corresponds to what we've been doing throughout here. So let's go through this. So you see that the constructor, beg your pardon, of this class, when it is run, the class, it defines a empty data frame, and that's all. Then the first method that is coded in this class is the load data method. And you can see here that what I'm giving is the path to the data file. And then just like the way we did, so once you have this path, you can read the CSV, load the CSV in that empty data frame that we had constructed here in the constructor, or created, defined, beg your pardon, in the constructor. So once this DF has the data loaded, we do the little data cleaning or treatments that we did just earlier. So first we change the date into a datetime format, and then we set the index to be the date, and then we delete the date column that's left. Great. The next method, which is called populate indicators, as the name suggests, we simply add to our data frame the indicators that we've computed. Then what we do is a populate signals. So that's the second step that we did, where we implement the rules of the strategy and we change the buy signals to true when the buy and sell signals, when the buy and sell signals have been validated or verified. So that's that. And then finally, we have a bigger function, which is running our backtest. And as you can see, it's exactly what we've done before. Anyways, so let me actually comment this. So what we would want to do, I actually want to remove that and simply finish that cell here. So we're just running the class for now. So we're just defining the class. So this is done. So now we should actually use it to run the backtest. So you can see that when I do that, well, nothing will happen because the constructor is being run. The first thing we should do is load the data. So the path ends up being just the name of the data file, simply because the data file is at the same root, at the same path of the chapter 9, our code. But you could have the data file elsewhere, so you would write whatever the path is, and that would work. Okay, that's how it would work, beg your pardon. Then second thing we should do is after that, we should populate the indicators, populate the signals. So after here, when you run it, nothing is printed, right? Because we're just doing those loading of those attributes in the class. And finally, if we want to run the backtest, we should run the backtest. So if we do that, we will see that what happened, well, exactly what happened here happens here nicely. And that's great. And you can see that now this is really nicely structured. The cool thing about this, let me highlight this, is that, well, if you want to change, say, for example, let's just remember that our final balance is $7,844. But I say maybe, oh, I want to check what would happen if I actually didn't consider for my short average, a 50 period average, but I do 100. So if I did that, I change here, but I also mustn't forget to change in the rolling. So I change the parameter of my MA, what was my short average. So I changed it to 100. So let me rename this here. So sorry, I didn't really do it in the right order, but so we have MA 100 here, computed over, the rolling is now over 100 period, change the name here, change the name here, and I think that's all good. So I'll rerun this, so we redefine the class, and if I rerun this, what do we get? Well, we get that now our final balance is more than $12,000. So a much better performance than the 50 moving average for past data, at least for past data. And all this, by the way, took 1.1 second. Pretty cool, right? Speaking of adapting the code to other strategies, this is the aim of today's homework exercise. A good practice so that you can then implement your own trading strategies. So here we suggest that you use a strategy, build a strategy using a different type of indicator, an indicator called the Bollinger Bands. If you don't know about these, I suggest you go on this website and so you can learn about them, etc. Then you can just follow all the instructions here to implement the buy and sell conditions, etc. What I want to take a few minutes on is to talk to you about a strategy that uses Pandas data frame and can compute on this a ton of indicators. Probably most of the ones you would like are in there. So I want to show that in case you want to build some strategy of yours. So for example, here I'm giving the illustration of how you could compute the RSI. So that's another very well-known indicator. So let's head over to their website so you can see how it looks. So that's the documentation. So I'm going to click on TA. So there's a ton of indicators. I mean, there's really a lot of them. There's no point going through all of them. You can see, by the way, that they are, you have different libraries corresponding to their family. So you have momentum indicators, volume, volatility, trend, and others as well. Great. So a lot you can do in here. And what we're looking into is the RSI. So I'm just going to do the search RSI, and I find that there is RSI indeed. The first thing that pops out, what we see here is momentum stock RSI. So it's not the RSI that we want. That's the stochastic RSI. We want the normal RSI. So let's pretend I don't know too much, and I'm just going to, copy here. As you can see, you have all the documentation. So let's say I'm copying this, and I want to now add a column in my data frame, my data frame with the computation of the RSI. So first things first, I need to import the TA library. So indeed, if you have never installed it before, you will have to use pip to install it. Anyways, let me now do that. I will create my df RSI. Let's do RSI. And I'm adding this column. So I'll paste this. And what do we see here? It says that it wants the closing value of the asset, and that should be indeed in the form of a Pandas series. In other words, a column of our data frame that's a Pandas series. So great. So I can just simply remove this, put this into apostrophes or quotation marks, and then will be df. So you have the window, the period over which you're computing the RSI. So that's its parameter. And you can see that it's asking for int, and the default value is 14. So let's simply leave that. And here, this is a keyword to ask whether I should fill the non-values in the computation or not. And we're not going to do that. So I'm simply going to close this, finish this. We'll print the df so we can see whether we indeed have added. I have forgotten to actually run this cell, so that's why we got this. And now there we go. And as you can see, we do have our RSI window that came out, but we have a TA momentum object, etc. which makes sense actually. If you look at the documentation, you will see that this is a class. So this is not returning as a number, it's returning the class object of this class here. So if we want the actual number, you can see that we need to use this RSI, which returns a Pandas series. So let's do that. We simply have to correct here and just come here and do RSI. Oh, what have I done? It went at the beginning instead of the end. Never mind. Let's do that. And there we go. We have our RSI that was nicely computed here. Great. So now you really, with that and this code that we built today and this class, you really have already a lot of tools to create your own strategies and backtest them. The next chapter marks the conclusion of our course. We will revisit today's strategy, but dive deep in the analysis of the results. Today was just a quick look at the profits, but we need to do much more than that. So next time our focus will include computing and plotting key metrics, assessing the risks, but also including the trading fees in the backtest. So see you there and take care.